I'm just trying to get some clarification on ETFs and specifically versus mutual funds, because I know in some cases companies offer funds and they have an ETF version of the same fund.
Yeah.
And I'm just wondering, do they hold the same holdings? And if so, why do they have two versions of the same thing? And which is more beneficial if you were going to hold one? Would you rather have mutual funds or ETFs?
Let me just say in general first, Mark, I'd rather have an ETF than a mutual fund, probably.
And why?
Because they are traded in real time, number one. That makes anything done with the management a little bit easier. And frankly, the other thing I like is they're not managed as much as a mutual fund. They don't hold cash. They're not looking constantly for buys and sells and managing. On any given day, say, or a week or month, we have a time and say the market, economic news is bad. The market is down $200. The next day it's down $300. The next day it's $400. Bad news is persisting. This looks like it. And when it's down, when it opens on that third day, and you're saying, man, I want to sell my mutual funds, you've got to ride out that entire day. That day might close down 800 points, and then your mutual fund is priced and it places the sell that you put on at 10 o'clock that morning. So that's one reason. So mutual ETFs are in real time. If you notice on a mutual fund, when you purchase, or an ETF, when you purchase it, you don't click on the tab at your brokerage that says mutual funds. You click on the stocks tab, or it says stocks and ETFs sometimes. But that's the one you click on. It's treated like a stock, and it trades in real time. So I like that about it. I think it gives you a little bit of an edge, but nonetheless, they're not meant, like mutual funds, they're not meant to be traded. They're meant to be held. The other thing is they generally, and I shouldn't say this, but they generally don't get diversified. I was looking at a mutual fund night before last. It had 330 positions. I mean, that's ridiculous. And so you're not very unlikely to see that in ETFs. The other thing about ETFs, they'll track it on the downside somewhat, but they are a little bit more protected. They don't have a big cash position on the downside, and they do track the market much, much better on the upside, and that's very good. So if I had a choice, and their fees, internal fees of the ETF are lower than they are mutual funds. I know that some people say, well, mutual funds, I trade in a mutual fund company that has no fees. Trust me, they have fees. I live in the same county as Vanguard's corporate headquarters. And I've often said, have you ever been at Vanguard's corporate headquarters? Have you ever seen their complex from the air? It is, trust me, they didn't do that with no fees. But they're allowed to have internal fees that you don't see. ETFs are a little bit more open that way. I wouldn't use ETFs as a source of diversifying your portfolio. And what I mean by that is I wouldn't use sector ETFs. I still don't necessarily like sector ETFs. But if you were strictly an ETF investor, you could break it down in sectors that would be a little bit more appealing than mutual fund sector. Hey, I want to thank you for watching the clip. We sure do appreciate it. Would you go right now, click on that subscribe button if you haven't already. That helps us. We would appreciate it. Thanks again.